One of the things that I really enjoy about our monthly or quarterly CFO calls that we have with clients is just seeing them start to use their understanding of their financials for business decision making. So for example, if you know what your gross profit margin is, if you're considering taking on any additional overhead expenses, you can simply divide that amount by your gross profit margin amount, the percentage, and then it will give you the amount of revenue that you need to support it. So for example, maybe a client might have a $60,000 administrative position support role that they need to bring into their company. And if they have a 30% gross margin, for example, they would then know that they need about $200,000 of revenue to support that position, right? Or maybe, with a 30% gross margin, perhaps you have a $50,000 loan balance that you want to hammer off in the next quarter, right? Then you'll know, okay, that's about $167,000 of revenue that we're going to need in order to hammer that down. So when you then know those numbers, you can then set your priorities with your sales and business development team to be like, hey, look, this is going to be a big focus of ours over the next quarter, the next year, whatever it might be. We need you to really focus on ramping this up so that we can tackle this particular target. So if you're not doing it already, if you don't have a CFO, I would say at the very least on a monthly or definitely quarterly basis, look at your numbers, understand what these metrics are for your business, and then start to think about your decision making in terms of your financials and what that means from a financial perspective, because that will then direct your targets for things like sales and business development. If you have any questions about this, feel free to send me a direct message. I'd be happy to talk about it further.